everybody, welcome back to Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. Mihir Gandhi is a consulting partner at PwC India, leading the payments transformation practice. With close to 15 years of consulting experience, he has developed a strong business and technology consulting exposure in India and international markets including the Middle East, Africa, and Southeast Asia. Mihir has been part of the digital payments growth story of India and has successfully led marquee projects. He has managed the core team to set up the domestic card scheme of India. He has assisted new private sector banks and payments banks for setup of payments products, guiding them on strategy through execution. His practice has recently published the India Payments Handbook 2020-2025, a thorough review of the payments ecosystem in India, and also puts out a regular newsletter on the subject. And now, please welcome Mihir Gandhi, partner at PwC.
Hello, Mihir.
Hi, how are you?
I'm fine. Yourself?
Good to see you.
Good to see you. Thanks for taking the time to do this. It's an exciting place, India, these days.
Yeah, a lot of things happening in India. Every day something new comes in, so we have to be on our toes. So we do a lot of work in India. We also do some work in international markets like Southeast Asia, Middle East, Africa, markets that are being developed. And because India has done a lot in the past 10 years, they want to learn from us. So I think that is something which we take pride in and say that, how can we help you to leverage our learnings and not make the same mistakes we did? Obviously, the countries are different, so you cannot compare. But a lot of African countries, a lot of Asian countries are similar in demographic to India.
Now it's called the India stack, and it looks like everything was perfectly planned and executed. Ultimately, it started in 2009 with the Aadhaar system. So when you look back over these 10 years, was it actually as straight an evolution as it looks like from hindsight?
No, I think there was a plan for some of the components, but some of the other components just accidentally fell into place. I think it's all worked out pretty good because the Aadhaar plus the UPI plus the eKYC or central KYC, all of this has come together to actually create a digital experience for account opening, transaction, as well as cross-selling other products of FinTech like insurance, lending to the same customers. So I think that is how the evolution has happened. And I think it's worked pretty well in the Indian context because all the people were given a bank account. The Jan Dhan kind of program which happened where 800 million people have a bank account today. But even the number of debit cards is 850 million today. That's big. Everyone was given a free debit card and a free account. So that set the base coupled with Aadhaar for a strong payment/banking foundation.
What I love about this, you can go to the Aadhaar website and you see real-time data, how many IDs have been issued, how many have been updated. It's very transparent.
I think all the websites, be it NPCI, be it Aadhaar, be it the Reserve Bank of India website, all of these are pretty transparent. And they upload the latest statistics, latest reports, so everyone can see and take the data.
So when we're talking about payments and UPI as a unified payment interface is the important thing to talk about. What's the origin of that? Why was it developed? What is the market does it address? And how has it evolved over time?
So I think the initial product that was developed was IMPS, which is Immediate Mobile Payment System or Instant Mobile Payment System. And that was the underlying foundation. So that was the technology or the foundation, which was the base, which allowed the instant money transfers from one person to the other. The UPI is more of the overlaying layer on top of IMPS, which allows you to generate a proxy, which allows you to ask for a request to pay transaction, which is a pull-based transaction, and other value-added features on top of it to make customer process easy of getting the transactions done. So that was the first product from one of the early products from NPCI. And then UPI came in much later, 2014, which was the first version. And then they kept on building on top of that. And that is the reason, why it has seen that success, that close linkage with IMPS as the platform or the base and UPI at the top has helped it to get it. And different use cases. So basically they started with P2P, which was a very simple and traditional use case of allowing payment to happen. And then we went on to person to merchant. Then we went on to different use cases in the form of request to pull, where I could pull your funds or transactions. I could split the value of the transactions, like split bill. So I think those are the ones that have actually helped. And then there were other things like I can put in an invoice. The invoice can be presented on the specific date. So you pay the funds at that point of time. This is like the evolution of UPI. What has happened is the entry of the non-banking entities into the space, the likes of Google Pay, Phone Pay, and now with WhatsApp and others coming in. I think that is going to drive the adoption and usage of UPI, because I'm anyways using that platform for my social messaging or other needs. And if I can just overlay the payments layer on top of that, it will make my life as a consumer easier. That's the key philosophy or fundamental where UPI is picking in. That coupled with the QR code based platforms or the technology that we have seen in India for different use cases. So it could be transit, it could be a shop based payment. In the COVID times, I didn't want to touch anything. So I just took my phone, I opened the scanner and I scanned the QR code. It was through the UPI technology. The underlying was a bank account. It could also be a wallet, but the movement has happened from wallet to UPI, where everyone wants to use UPI and not store money in an additional form factor, which is a wallet. That's the shift that has happened. And that's the reason why we're seeing that 2.3, 2.4 billion transactions per month. Maybe in a year, we'll see double the volume of transactions. So maybe end of 21 should be 4.5, 5 billion transactions per month.
It's an amazing growth. And so you've got a number of publications that ultimately brought us here to this conversation. One was just released at the end of last year, India Payments Handbook 20 to 25. And then you have a monthly newsletter as well, which is very comprehensive and a reflection of what's going on in the ecosystem. So the numbers that you were quoting, where UPI had a billion payments in October 19, had 2 billion in October 20, and now, as you say, it's already 2.4, 2.5. The typical exponential curve may be starting slowly and adding, and now we're really at the point of a Cambrian explosion, it seems.
Absolutely. This year and the next year is going to be where everyone is going to keep your eyes out on what's going to happen. And the explosion is most definitely going to happen in different use cases. The comfort which customers have today of using UPI, of using this non-banking payment apps, which was not there maybe a year back or a year and a half back, that has really triggered and helped the growth of UPI transactions. So because of COVID coming in, people were forced to make digital payments. So a 60 or 65-year-old person who was not allowed to move out of the home, but he needed to make bill payments for his electricity. He needed to buy food and groceries for his food. So all of that happened online, and that spurred the growth of UPI in some way, where the payments were made through UPI and the transactions were happening online digitally. That's spurred it. It's going to go exponential, and all of us are watching keenly on how it is going to evolve. Two things I would like to say over here is the technology or the infrastructure that's needed to support it. I think NPCI has done a great job to build that and plan for that much in advance. It's the banks and the other payment companies now that need to keep pace with the growth in the volume. Some of the banks have done well. Some of the banks are struggling to keep pace. And because of that, the transaction declines in the UPI volumes have seen some increase in the last few months. So I think that is a concern area. I mean, if you have to grow from 2.4 to 4 billion or 5 billion, if you don't keep pace from an infrastructure perspective, then it will fall through. The customer experience will get hampered. The trust in the payment platform will reduce. So all of us are making efforts in India to see how we can support that. NPCI is already doing that, but the banks need to keep pace, is what I would say. Second factor was on the pricing of the UPI transactions. So last year it has made zero from 1st January 2020 for the full year. Now there have been some discussions where they are saying how can we recover and give back some of those from a budget perspective. So there have been discussions at a government level, ministry level, where one is saying that how can you make good the potential losses where payment companies, banks, for the last year, if they've charged zero, they still need to maintain the technology, the infrastructure, invest in the platform, make life easy for the customer. So pricing is going to play again an important part. So both are linked. The technology infrastructure upgradation and the pricing, both are linked. Because if you don't have money or revenues, then why will you put that investment into the technology just because someone is telling? So I think these two are the important factors to watch out for. And that's going to really help in accelerating the pace.
Previously, both the payment service provider and the bank were charging based on the size of the payment, and both of these numbers went to zero. How are people in the ecosystem making any money and sustaining the build?
Two things have happened. One is players have realized that payments is a hook for getting the customers in and for getting the data and the transactions. But then you add different overlay services like lending, like insurance, like other payment products or banking products for which you can actually charge the merchant or the consumer some money. So I think that is happening. So a lot of banks, a lot of fintech companies like PhonePe, BharatPe, etc., are using UPI or payments as a hook and doing analysis on providing the best product for that particular merchant or the customer. So it could be a short-term credit working capital loan for the merchant. It could be a early salary kind of loan where it's a payday loan for the particular customer who is typically in his 20s and he or she has run out of funds by the 20th of the month or 25th of the month, and they want to avail a early salary loan. We are expecting that the pricing for UPI to come back in some form. Maybe in a few months, hopefully that should be resolved. And the entire industry is trying to see how some pricing can be given so that it makes sense for all the stakeholders. And the stakeholders are motivated to keep on investing and upgrading the technology and providing a superior experience to the customer.
So you mentioned, of course, the pandemic as a catalyst. If you look a few years back, you had the big demonetization event in India as well. And I remember that time where some of my friends in India were saying, if we hadn't Paytm on our mobile phones, which is the largest payment app, then we would have been royal screwed. We wouldn't have been able to pay for anything. So is Paytm ultimately running on the UPI rails as well?
So Paytm has 2 or 3 platforms. It has got a bank license now in the last 2 years, which is a payments bank. So the payments bank is essentially a proper bank licensed by the Reserve Bank, and it is running on those rails. The second is, as part of the bank, yes, it also offers UPI as a service. Traditionally, Paytm was a pure wallet company where it had a stored value of money in the wallet, and that was being used to pay for, in 2016, the different transactions post demonetization. But now people are slowly moving away from the wallet concept and they prefer to hold their funds in the bank account itself, which could be any bank account. And UPI allows that interoperability where even if I have a bank account of another bank, I can still use the Paytm app through UPI to make payments and link that virtual payment address or the VPA to the underlying bank account. So Paytm has evolved. It is, kind of doing a lot more than a wallet or a bank account or even a UPI. It is now getting into other financial services products like wealth management through Paytm Money, where it is, going to offer stockbroking services to different customers. And it is also getting into lending through the Paytm lending. It is also getting into a big way into acquiring of the merchants. So I think these are the different business lines under the financial services company that it is getting into. So that's going to be interesting. But honestly, the day of the wallet in India, in my view, is over. Wallets will be slowly coming down, and with UPI coming in and with other payment products coming in, that is going to be dominant. So cards and mobile are going to be the 2 form factors. In mobile, everything will be linked to the bank account or to your card, which would be through tokenization.
In your report, you also mentioned that with the increase in UPI transactions, there was a noticeable decline, at least in debit card transactions. I don't remember the credit card side that well, but so also UPI basically replacing the debit cards then.
That's correct. So UPI is challenging because if you have a bank account and a VPA, virtual payment address, which is a proxy, I can just put your name at the rate of UPI or whichever handle you are on and transfer money to you. So it's as easy as that. So why would I want to use my debit card online to remember the 16-digit number, put the expiry date, etc., to make the payment, right? So I think that is something which is a cumbersome process. At a physical location, still cards are used a lot. But with QR code and other efforts by the industry, UPI could slowly come up and take up that mantle also. In certain industries or sectors where, say, transit, where you require a fast moving transactions happening, there I think a scanning of a QR code would be faster rather than waiting for the card to happen. But again, tap and go in the card is a big phenomena now, with contactless being pushed in the economy. And again, tap and go contactless for transit and others could see a big push going forward.
There are multiple different payment systems. So we talked about UPI, but there is the motorway, the highway payment system, and there is a bill payment system as well. And so how do all these pieces fit together?
So these are typically the products which National Payments Corporation of India has established and developed. The idea is pick up each particular need or use case and try and solve for that. All these products are under the same company or entity, and the idea is to make it open, interoperable, and use for different requirements. So for example, for the Bharat Bill Payment System, which is BBPS, the entire bill presentment and bill fetch layer is happening on that platform. But the actual payment of the bill is outside. So you can pay through a UPI, you can pay through a wallet, you can pay through your net banking, through your bank account. BBPS is more for presenting your bill, for helping you to fetch the bill details by accessing your mobile number or a OTP that is sent to your mobile number. Once you have the bill details, then you can choose to pay, which happens on the traditional payment platforms like a UPI or a wallet or a net banking or even a card, which could be a RuPay card, Visa or MasterCard. So that's how you differentiate it. And thankfully, there is no overlap or confusion on which platform should I use for the same payment. So every product of NPCI is very, very unique and different. And it is catering to one specific segment or use case of the country. Another example I can give you is on the transit side. NPCI has come up with NETC, which is the National Transit Product, where I can use the same card, which is a chip and pin card, to pay for any transit or metro travel, including a bus, including a metro, including a waterway in any part of India. So that is going to be the next step going forward. And with my same RuPay card or Visa card or MasterCard, I can use the same card, which is a chip and pin card. It could be a debit card, it could be a credit card, to make my payment for any transit. So I think that is going to be the next step. It's very, very clearly demarcated. So card would be different, UPI would be different, Bharat Bill Payment System would be different, Aadhaar enabled payment system is different, which is basically for your direct benefit transfers or your subsidy grants that you typically get from the government, and for authentication for different basic transactions. So it's very, very clearly demarcated. And that's the beauty of how everything comes together and plays out.
In the pandemic, were there subsidy payments that the Indian government made to individuals or businesses? And were they using these Aadhaar pay rails then, because you then have everybody on the system already and you know how to send the money?
So Aadhaar was the way to identify and authenticate the transaction or the person. And once the money did flow into the bank account of the person, the way to remove it, because everyone needed money. So if you needed cash, then the way to remove it in a rural area was through a Aadhaar-based authenticated POS terminal or a handheld device. Because ATMs in the pandemic almost came to a standstill, and during the lockdown, there was no cash being fed into the ATM. So even in the rural areas, the number of ATMs is less, and the people actually wanting to travel and go to an ATM at the risk of getting the infection was very, very low. So what people did is people had those handheld terminals, which are Aadhaar or biometric enabled. Once I get my money in my bank account, which is a subsidy grant, I typically go to that person or to that location where the biometric devices, I authenticate myself and I withdraw the cash, which helps me to, run my house for the next few weeks or few days. That's the way it happened in India. And if you see in the months of March, April to July, the spike in Aadhaar enabled payment transactions did reflect that pattern or behavior that I just spoke about.
First of all, we talked about Paytm. Paytm plays a big role here as part of PayPay, which is the largest mobile phone payments company. Now, they spent a bundle on marketing to achieve that, but that's Yahoo SoftBank, who is investor in Paytm, and Paytm Technology joint venture that has been very successful here. And Japan has what is called My Number, which is equivalent to an Aadhaar number. It's like the US Social Security number. And they're desperately trying to get people to use it. So far, unsuccessfully. When we're talking large numbers here, Japan is still 125 million people, but you managed it very well in India with more than 1 billion. None of the other countries really can get it going in the same way. So I love how the infrastructure has been built. It's fascinating.
Setting up of NPCI in 2008 through the Act of the Parliament, which was a legislation that was passed in 2007, I think that was a stroke of genius, and that spurred the entire innovation and infrastructure or the railroads for the entire country's payment system. Right from RuPay to IMPS to AEPS to the later products which came in, which is UPI, Bharat Bill Payment System, to the transit and toll products. That's been a very well-planned strategy from the NPCI officials, and all credit goes to them in planning this. And of course, the entire banking and financial ecosystem to support them and get the customers on those platforms and transactions.
So the other vector that might have played a role is really the mobile adoption. And clearly, there is a bit of a price point challenge when you think about the more rural population in India. But what also happened over the last few years is Reliance with Jio is a much lower priced mobile phone with a specific operating system. And that just increased the penetration of mobile smartphones quite tremendously as well.
Earlier, feature phones were the dominant type of handsets available with a large population. But now if you see the way Reliance has come in and the way they have forced the pricing, it was a kind of aggressive pricing strategy which they did for the first few years, where they said that we will price it very low, maybe take a hit on our profitability and slowly try to get the market. They have the largest market share now at around 35-40%. There are only 3 players left, including Jio. So there is Airtel and there is Vodafone with other partner. Yeah, so earlier before Jio came in, there were 6 or 7 telcos, but now that has come down. So I think they've helped to do is get a mobile smartphone in the hands of most Indians. So today the percentage of smartphones is almost 50% of the population. So we have 450 to 500 million smartphones in India today, which was less than 100 million a few years back. We have less than $100 smartphone that is now available in India, and with a good camera, with a good screen, good user interface, which really helps to give that option to the customer. Backed by the smartphone, there is a internet speed and the data that is being offered by Reliance, where they say that unlimited data you can use with a bundle price of maybe less than, I would say, $5 per month. Internet or data in India, the mobile side is one of the lowest in the world. Because of that, a lot of transactions are happening on the mobile now, and people have moved away from desktop or laptop-based transactions online, and everything does happen on the mobile.
Talk about financial inclusion, right? It's really something that comes with an affordable telecoms infrastructure in this case, rather than anything that the banks are doing necessarily. So one is a condition for the other.
Financial inclusion has really worked well, though I would say that there is still a lot of room to work on that. The Reserve Bank is pushing all of us to take a step in that direction, because a lot of these transactions, if you see even UPI transactions, even card transactions, 60 to 70% are still coming from the metros and the tier 1 cities. But what about the tier 2, tier 3 and the tier 4 cities in India? And India is such a big country. So I think that is something which all of us need to focus on. RBI has been pushing us to there and see how you can offer innovative products. Recently, in the strategy for payments that the regulator came out with, there has been a big focus on offline based transactions. What does offline based transaction mean? It means that when the internet connectivity is not there or the telecom connectivity is not available in the rural areas, then how can I, as a payments company or a bank, still enable the payments transaction to go through with safeguards, with checks, and with certain, innovations happening? So a lot of pilots are happening. Some companies or fintech startups are enabling some use cases of offline-based transactions on a wallet, on a card, through a feature phone, and that is something which is going to drive the next wave of payments. Hopefully it will be large volumes but low value in those regions.
Brings us back a bit to the pricing of the transaction. The original approach was also to charge at a level that really avoids these micro payments, not to overload the system. And it's like a catch-22 when you want to drive inclusion with smaller payments and you lower the fees, then you risk the infrastructure breaking down. It's a cycle that you described earlier that we're trying to break again. We need to find a happy medium where smaller payments can go through and people can still make enough money to maintain a proper infrastructure.
That is something where the balance will need to be found going forward. Banks are very much focusing still on the tier one and the profitable customer segments. But I think what we need to now do is set up technology or infrastructure for the rural segments where you can also enable digital payments and fintech-based products for those locations. So what is happening recently is there is a lot of pressure on the core banking services of the banks. Because of the surge in the UPI transactions, they are struggling to keep up with that demand. And a lot of banks are thinking about having a light version of a core banking platform, which will enable you to debit and credit your customer's account in that for specific payment transactions. So I think that is a new trend and which will evolve going forward.
Do you see a domestic solution for that in terms of a core banking package, or what is the technical infrastructure that's going to be used to accomplish that?
Typically in India, there are two core banking platforms that are used. So one is the TCS Banks platform, which is a global platform as well. And there is another Infosys platform, which is again an Indian-based company, which offers core banking systems. So TCS and Infosys both have a lighter version of the core banking platforms that can be used. Maybe banks are still thinking on how to do that, whether they should go for the light version or whether they should go for another instance of the same full-fledged core banking platform, because maybe not all the functionalities are supported in the lighter version. So banks are still struggling around that, but the large banks are okay. I'm talking about the mid-sized banks that are seeing this problem in India, where they're saying that how do I keep pace with the rapid growth in the digital payments? And all of them have to hit my core banking platform in some form or the other. So there is also some thought around establishing a middle layer, which is the payments hub ecosystem, where I can first hit everything on the payments hub, and then the payments hub will talk to my core banking, and that way the load or the pressure on the core banking will not be as high if it is directly talking to the core banking. So there are some thoughts coming in. We'll have to see how it evolves.
Continuing from that, what do you expect to happen to the banking industry? There's some notion in there that the big banks still have the skills, they've got the people, they've got the funding to keep pace with technology, but second tier, third tier banks just get overrun and can't keep up anymore. So they just become dumb pipes. At least that's the risk. Yeah, you have got your account there, but everything else happening with the payment service provider, for example. Is that something that might happen? Is it something that the RBI is concerned about as well?
So there has been consolidation that is happening in the overall banking ecosystem in the last few years. And those consolidations are typically on the public sector bank side, where a lot of the PSU banks are being merged together. So 2-3 PSU banks have come in. So there have been multiple instances of that, because of which already the number of banks have come down. The large banks have become larger. So that's happening because the government clearly wants to say that if there is a risk in one of the banks, I don't want that risk, which will impact the overall customers and the overall ecosystem. I want the weaker bank to merge in with the stronger bank and that will help the overall ecosystem and also enable the investments, the cloud, the customer deposits to be centralized in that location. I would say it's a good thing because the banks are now focusing on consolidation, focusing on putting their money, investments in the new age technologies, which will continue. I think fintechs or payment companies will still continue to play their part. I don't think the role of the banks will be challenged just because these new age fintechs are coming in. The way the structure in the Indian banking and payments ecosystem is that banks still are a very much integral part of all payment transactions. So you cannot cut the banks out and say that I will own, for example, Google Pay and cut out the bank. So that's not possible. So banks are still a very integral part to the payment system today and will continue to do so going forward. They will have to innovate, they will have to upgrade their technologies, but I think that's already on the cards. So I don't think the banks are going to be challenged in that sense. And people have trust traditionally in keeping their money with banks and they think that it's safe. But I don't know who is a new company that comes in, like a PhonePe or some other company. And I don't know who they are. So for me, it is a little bit difficult as a customer to place my entire savings or money in a new age kind of technology company.
I think that's what you see in Europe as well, where we have the relatively big neobanks and unicorns, but for the most part, they have the secondary or even the tertiary account, not the main account where your salary payment. So the other point is it plays a role in this whole Reliance Geo ecosystem as well, where Facebook invested. Interesting times, of course. I've seen so many of my friends suddenly popping up on Telegram and Signal because there's this social media frenzy going on with WhatsApp. But WhatsApp is a major player in India, 400, 500 million users. And they do have a somewhat limited, but they have an approval to use WhatsApp payments via the UPI rails then as well.
It's a good way to get social integrated with mainstream e-commerce payments. I think WhatsApp is going to be the next big phenomena, in my view, where even though people are still concerned about the data privacy and all, I don't see people leaving WhatsApp and moving on to migrating to, say, other platforms like Signal or Telegram for that matter. It is happening in some ways, but I think people will soon realize that you can't get 500 million people on that platform, right? So I think that is going to be the challenge where even though I want to use Telegram or Signal for specific business needs, but still a majority of my social interactions outside of work will still happen on WhatsApp. And WhatsApp payments is well poised in that way because it's just got the approval from the regulators and the NPCI, and it can leverage not only for payments but also cross-sell other products like insurance, microloans, other financial services products through the platform. So it is going to be interesting seeing how that plays out.
This has been such a great success story that certain agreements, MAUs, have been signed with other governments that are looking at leveraging that technology, which is a smart thing to do rather than trying to build it yourself from scratch. I think wish more countries did this. But what's your perspective of the internationalization of the India stack as a whole, or UPI specifically?
It's a good story that some countries can adopt and learn. I think it works both ways, where even India is constantly learning from other countries. So it's not a one-way street, right? The more we go outside and the more we talk to different people, we also get a lot more information, knowledge from the other countries. So I think it's a give and take situation. Fortunate part is that NPCI has set up their international subsidiary, which is called NPCIL, which is focusing only on the international business. They have gotten a professional CEO and the entire management team to focus on the internationalization of the NPCI stack that they have developed over the years. And the mandate is basically that you go out, help the other countries that need the stack in some way. It could be the entire technology. It could be some parts of the technology. It could also be some standards or proprietary messaging platforms that they have developed. So it remains to be seen how it will pan out. But yes, there have been some MOUs, some agreements that have been signed with some Southeast Asian, some Middle East countries to take UPI global and also accept RuPay as a card in those countries. But it's still early days. I think it will be quite interesting to see if it goes down the Union Pay way and say that how Union Pay enabled acceptance for their cards in European and other international countries, whether we will do that or whether it will still be a very collaborative approach with partnerships like JCB, like few other Union Pay and few other players, and going through that route. So it's a wait and watch thing, but yes, the key takeaway is that we learn from other countries and other countries learn from us. And the more we go out and offer our technology stack and services, it will only be better for the entire world.
The initial steps look a bit like also what Alipay and WeChat Pay did, where they went abroad and enabled their applications for Chinese tourists going abroad. And so if you're now an Indian going abroad to the UAE, for example, you would be able to use your UPI interface to pay. And once you have that step done and the foot in the door, then you can also think about localizing this and basically build the domestic payment system or augment the domestic payment system in another country.
So I think the first step is to enable acceptance of Indian customers and make their experience seamless in international countries. The second step is for some of these countries in Africa and in Asia, they are in the process of developing their nation level payments platforms, and whether they can also lift and shift some of these technologies that we have developed in India to some of these countries is a thing that I would think is very much possible. And some discussions are already on, but we'll see how that pans out. So NPCI is very much interested to use their platforms and technologies and offer them either on a commercial model or not on a commercial model to some of the countries.
Super wonderful conversation. Thank you very much. So much going on, and I think a year from now we can take a checkpoint again and see what all happened.
Absolutely. I think very exciting times, and we are fortunate that we are part of this journey. All of us are learning every day. It's just a super experience.
Best of luck. Thanks again.
Thanks, Norbert. Thanks for having me here.